imbalanced. You had a capex driven company going up, railway, defense, stuff like that, right? So what the budget is doing basically is balancing it out. So primarily, instead of somebody looking at a very sectoral, myopic kind of a angle, right? Maybe some gold stock will do well because of the gold tax, right? But in general, I would say this budget is basically making the market again very very balanced. So the consumer stock, which has not moved for the last 4 or 5 years, will have some kind of a will get some kind of a kick out of the budget, right? But at the same time, the infra stocks or the capex kind of a stock will not start underperforming, right? Because the huge number going on, electronic manufacturing, all kind of AI equipments, they'll keep doing well even in the future.
So if we talk about the renewable sector, or let's talk about the Awas Yojana first. So the government has said that they'll provide 3 crore new
Right.
houses further in the PM Awas Yojana. And apart from that, they were talking a lot about the East Corridor as well, as to how they are going to bring more development in that region: West Bengal, Assam, Andhra Pradesh, Odisha, Sikkim, Assam, and all of the states, right? Bihar included, including Bihar. So, which all sectors do you think will stand to benefit, one from the revised allocation to the PM Awas Yojana and this infra push in the eastern sector?
See, the usual suspect, like, right? So the moment you have a higher spending on houses, you got cements doing well. The volume number will of cement will go up, right? Still, next beneficiary in terms of housing stocks going up, and all kind of building material, right? House related, all the kind of wires and everything, paints and all kind of stuff, right? Now, the more important thing is, the kind of emphasis, because PM Awas Yojana was there in past also, allocation has been raised. That's the only thing. So they have already done 3 crores. Now they're adding three more. Now, East West is a very important, way to look at India right now. People speak in political terms, North South divide. But if you look at it from an economic point of view, the divide is basically western part of India and the eastern part of India, where the GDP per capita of western is surely much much higher. You can't think of a Viksit Bharat when some part of your desert is not doing so well. You can't have that kind of inequality getting built geographically inside India. So what they are
Right.
attempting, and even in the past, the previous CEA, he has commented multiple time on this count, right? East has to come up. So not only the farthest east, which is northeast of our country, Sikkim and the Arunachal and the other places, Bihar, for example, very large population mass. I think the kind of thing they have brought this time for Andhra, for Bihar, even Bengal and Assam as well, it will be surely a very good step in terms of getting this inequality a little bit getting balanced out. So my sense will be, all in all, whether whatever policy they have brought, they have tried to make the basic foundational structure of Viksit Bharat very, very strong. Not letting sector left out, not letting geography left out. So it's basically a balancing and a very nice and important balancing to my understanding.
Got it. And now coming to the financial sector, like the broking sector, which you are a part of, right? So the STT on options has been increased from 0.062% to 0.1%, and the STT on futures has gone up from 0.0125% to
Right.
0.02%, which is more than, I would say, a 60% increase, approximately a 60% increase if we look at the net effect, right? Uh, if we look at the stock index performance, last I checked, when Sensex had recovered from early fall after the announcement of revised tax rates, now if we see the financial services sector, the Nifty financials was around 0.76% down. What do you read of this? Will this stop the FNO investors at all or not?
See, on the contrary, Kanan, I would say, look at all the policymakers, CBA chief, yesterday economic survey, right? They're all highlighting the fact, and we in the market also know, right? The amount of options trading happening in India is humongously high. We are doing phenomenally bigger number in options across the world. I mean, leave the developed economy like US and other places. We are doing even more churn in terms of our option trading.
Absolutely.
Yeah, and I think no one will agree with the fact that this is not good, right? People will say no, it's better to have little less of the same thing. In the short term, this will have some impact on the earning of a couple of brokerage houses who are basically dependent upon options kind of a trading. But that's not bad, right? If you make the system self correct itself, it's much better. Instead of getting a bubble built for a very long time and then seeing a large collapse is never a good idea. It's better to have
Right.
these kind of a speed breakers coming in on a way so that the bigger bubble doesn't get formed in India.
Right. And in fact, like to add to what you said, in the economic survey, it was clearly written that, they are largely the newer set of investors who
Hmm.
are looking this as a side income thing. And, the unique registered account holders with NSE has increased in the last 3 to 4 years from 2.7 crores to more than 9 crores
9
now.
crores.
That's a mind boggling number, right? So, definitely this is a step in that direction, but what all other steps do you think should come from the regulator side as well to curb this bubble that is getting formed? Because uh, my personal opinion here would say that this won't stop the madness. What all factors do you think should come from the regulator side to curb this madness?
See, it's a free market, right? And undue interference inside the market by regulator, by government policy is not good. As a free market thinker, I would say no, it should not do. But on a continuous basis, giving a warning well is what is, as a good guardian, the regulator and the government has to do. Keep on hitting the warning well. Maybe some operational changes, like some kind of a net worth requirement to participate into, or some kind of a limit. You can't have more than this lot if your net worth is below this, right? Some kind of a margin, raising some margin on those kind of a trades. So those could be a mix of it. But ideally, government saying is one thing. They should not force. They should not bring any kind of a rule banning or restricting completely trade participation.
Got it. Thank you so much, sir. Thank you so much for your time. So, just like in the format of budget, we'll move to part B, that is taxes. And we'll move to part B with our next speaker, who is C. Arvind Rao, who's a founder at Arvind Rao and Associates. So, Arvind, you have 20 years of experience. So I'm sure you would be having more experience in analyzing the budgets. What rating will you give to this budget out of 10 from a personal tax standpoint? Hi, Arvind. Am I audible? Arvind, I think you're on mute. We still can't hear you. Okay, let me move on to Bhuvna in the meantime. So, hi, Bhuvna. Bhuvna, to introduce with all of you, she began her career in 2004 and she's today the co founder of House of Alpha. So, welcome, Bhuvna. How are you doing?
All well, yeah. Thank you very much. How are you?
All good, all good. So, what's your rating to this budget from a personal finance standpoint?
I would say about 8 on 10. Could have done a little more on the personal tax bits, but it's okay. A 50,000 to 75,000 is hardly an impact. And then you just complicate, the structures instead of simplifying them. So, not very excited about what it meant for salaried individuals. 17,500. Yeah, I mean, it's okay at the lower middle to middle class segment. It might be a very good impact. But for investors, what we feared of more taxes had come true. So I wouldn't be very excited. Of course, I'm excited about where the money is going. I think it's all priority sectors: manufacturing, upskilling, education. So I don't mind paying the extra tax as far as it is being used for the right reasons. So,
Right, right. So, like you said that, like if I talk about the FM, she said in her speech that we are simplifying the tax rates. But what makes you say that we are further complicated it? Is that your opinion?
no, so what kind of simplification has really happened? Help me understand that. So, the number of tax slabs is just increased. You're moving to the new tax regime. That's fine. So, which is I think the only benefit that's coming out of it. So, we push more people into the new tax regime and simplify that part. But
So let's
uh,
talk about the small saving schemes first. Coming to NPS first of all.
yeah,
So, if I choose the new tax regime, I stand to benefit from an enhanced limit of employers' contribution on the NPS, right? So
yeah,
earlier the employees used to contribute up to 10% of the basic salary of the employee to the NPS, which was tax deductible in the hands of the employee as well. Now
yeah,
that limit for private employees has also been increased to 14%. So
correct.
do you see this as a good step by the government in promoting a scheme like NPS, where they can make sure that people at least stay invested until their retirement.
Yeah, absolutely. I think NPS is a very good investment option. It's low cost, it's equity for the long term, which is very critical. I think, for so many years we've only had EPF as the retirement plan for salaried individuals, which is not a great idea because in the long term you're trying to beat inflation and debt instruments don't really do it. So now is an opportunity for salaried individuals to invest in equity without taking too much risk. So and at very low cost. And by the inherent nature of NPS, which is you're sticking with that money, it helps long-term investing ideas in equity. So increasing that limit, I think, has been a very good thing for long-term investors. Retirement is something that we will have to handle by ourselves in our country. So promoting that or encouraging more investments in NPS, I think, is a welcome move.
What is your view on ELSS as a product? Will it lose its shine that people that you it used to attract people towards because of the ATC limit that was there? Because the government is silently fading out the old tax regime. So do you think ELSS will see lesser flows and NPS will become more popular as an option comparatively?
Yeah, that is but obvious, right? So the government's intention is to move people away from the old tax regime. Only those people who have some home loans and all are still sticking on to the old tax regime, I think. So in the new tax regime, it really doesn't matter. Your ATC deductions don't really have a place. So ELSS should, over a period of time, maybe in the next 5 to 6 years, will lose its sheen. More investments in NPS is probably a good idea.
Got it. So another interesting amendment that I can see from the fine print of the finance bill, we'll get back to it once we have a conclusive view on that. But what now seems is that earlier gold ETFs were used to be taxed at slab rates irrespective of the holding period. Now that will change with effect from if you're selling your gold mutual funds, gold ETFs after 1st April 2025, right? So that is another change that has come, which is not being talked about a lot. That is one. And second, the customs duty has also been reduced on gold and silver to 6%. So what is your view on gold as an investment class and the steps that have been taken in the budget, whether they promote gold as an investment class or they don't?
Uh, See, gold as an investment class has a place in an investor's portfolio, though I'm not like a very big fan of the asset class per se. But reduction of gold, reduction of the customs duty does make it more attractive. And I think also the prices have fallen. So it gold as an asset class, the government, whether they're trying to promote it or not, people are going to invest in gold. There is no taking anything away from it. So
Let me take let me take views of Shailendra sir on this. Sir, typically the government, if you're there, typically the government is very likely seen discouraging imports and encouraging exports. But this time, since we are largely importing gold, what's your view? Like, why do you think the government could have reduced the import duty on gold, the customs duty?
Sure. See, if you look recent trend, right? People are more into financial savings. SIP mutual fund has taken big time, but at the same time, our household major strength over the last century had been huge amount of gold lying at our home. It's not only for consumption; it's basically for investment, right? You have the value of gold 10 year, 20 year, 50 year, generational value, right? And I don't think it's a good idea for us Indian to have anything less percentage of gold being at our home, right? So as the gold prices went up across the world, right? This kind of a duty, reduction by the government is a good idea. It'll get the people back to have gold also as a part of his normal saving, because we are living in a very turmoil geopolitical scenario. A lot of fundamental of developed country dollar per se, the value can change in the future. It's a good idea at the moment that if we Indian hold more amount of gold to safeguard ourselves against any kind of a global turmoil. So it's a good idea to my understanding. Apart from normal advantage to a gold jeweler in India, but you have to be very, very careful which gold jeweler was keeping the inventory hedged or not. If somebody was not keeping the inventory hedged, he lose some buck here.
Right, because the gold prices have also fallen. My personal SGB investments are also 5% down. But anyways, coming back to the topic. So Arvind, do we have you on the call? I don't think so. We have him. But until then, Bhuvna, can you please run us down through the personal tax changes that were introduced in this budget?
Sure. So I think the standard deduction has gone up from 50,000 to 75,000. And
Right.
the tax slabs have changed. So up to 3 lakhs, there is no taxes. 3 to 7 lakhs is 5%. 7 to 10 lakhs is 10%. 10 to 12 lakhs is 15%. 12 to 15 lakhs is 20%. About 15 lakhs is 30%. So just that the number of slabs have increased. So there's the FM did mention there's going to be a tax saving of approximately 17,500 for an salaried for an individual. So that's the impact. I think it's too little. So she could have
Got
done
it.
better.
Got it. So the family pension limit has also been increased from 15 to 25,000, and then like you said, 17,500 up to that amount can be saved by the new tax regime. Those who basically opt for the new tax regime, right? So they can save up to 17,500 rupees in taxes, which is a good amount, albeit small, but a good amount. But as far as the capital gains taxes are concerned,
Yes,
one is very obvious that the basic limit has been increased from 1 lakh to 1 lakh 25,000. Second is that the rates have been increased from 10 to 12.5% on long term listed equity gains and mutual funds. For short term, they have been increased from 15 to 20. But how about real estate? Like, what impact do you see on the real estate investments? So, if we typically talk about the plight of investors who were stuck in projects since years, like, say, for example, if someone had invested 60 lakhs a few years back and their index cost of acquisition now comes at around 90 lakhs, they got their project after a lot of struggle. Now if they sell that property at say 95 lakhs, they would have to pay around they were supposed to pay around 1 to 1.25 lakhs of taxes, and
right.
now they'll have to pay 4.5 because indexation is gone even though the rate has been reduced, but
Yes.
still the this is a problem. So what's your view on that?
Yeah, I think this will be a big blow for real estate investors. Indexation was a godsend, especially for people who invested 15, 20 years back, and in places like Bombay, which has seen significant growth in the values. So I think it is while the tax rate has come down from 20% to 12.5%. I think in absolute money terms, it will be a big impact on investors. Indexation was useful.
Hi Arvind, we have you back. What's your rating to the budget? Arvind, I think you're on mute. Arvind, can you hear us? Hello, Arvind, are you there? I think we are unable to connect with Arvind, so I'll take the concluding notes from Shailendra and Bhuvna. So, yeah, sir, if you can begin.
Currency, India is like, passing through a very critical phase, right? The kind of demography we have, the advantage we have, you do not get the demographic advantage all the time, right? We are in that period where we have that advantage. So at this point in time, whatever the policy the government makes in India, and whatever Indian, as an Indian, whatever we do in our life, in our businesses, are very, very vital. Whether we will remain a low income country forever, or maybe our next generation will be a mid income or a high income also in the future. So right now that this current, last maybe 15 years or 20 years, in the next 20 years is very, very vital in terms of policy and access by us Indians, right? And if I look at the last 6 7 years particularly, I can see a pattern in the way the policies are coming. The focus shifted from demand to supply side reforms, and very, very strong emphasis on fiscal stability. and that is now giving us results. Our inflations in a global sense are relatively better, right? Which is giving a lot of room to our policymaker on the monetary side as well as fiscal side, is space to maneuver around, right? We had a huge NIPL, right, National Infrastructure Plan. Every financial year thereafter, 2022 and 20 onward, we had a huge investment in infrastructure. Now, the next challenge for us was getting the private capex done, which will happen only if the demand goes up. And demand will only go up when the per capita income or the people will get jobs and everything. Now, for the job, we always keep listening. We have a demography. We get a lot of graduates, qualified graduates, but majority of them are not employable. I mean, you must have read this story multiple times. So now, as a logical next step to what has been done in the last 5 7 years, the kind of thing they have done right now, right, in terms of making the skill improvement, kind of a government incentivizing the same thing. So making all the people in India semi and maybe graduate level plus, they'll become employable after the intensive kind of plan they have done. It's a very out of the box idea, I would say, right? So it's a very very big step which has been taken. So structurally, a lot of things has happened. Now, only thing, in terms of taxation, my issue is like what? Once you touch something, you run a risk of touching it again and again and again and again, right? So when you make it 10 to 12.5, 2.5 is not a big sum, it's still manageable. But tomorrow you can touch it 15, right? Tomorrow, a day after, it can be 17 and a half. So not having a clarity in terms, if I'm investing today as an SIP investor, I'm doing for 30 years, 20 years, the kind of taxation assumption I'm having in my head in terms of what my outcome will be. So I am betting on first market, right? Again, the returns are volatile, 12% to 18% CAGR, whatever I can get. On top of those equity volatility, if you're adding a taxation volatility as well. So tomorrow, I don't know, 10 year down the line, my SIP will mature. I'll pay 20% at that point in time in LTCG, right? So that's the one nagging thing. See, the government has to be very, very clear in terms of tax policy. You say this is my destination, and I'll move towards this destination every year slowly, slowly. But changing it in a little bit sense, but that was a nigging point. Structurally, it's a great budget. Leaving the taxation part as it is would have been a much brighter idea to my mind.
Got it, got it. But what's your view on we have not really seen a static stance on listed equity gains. If we talk about the last 5 to 10 years, because the foreign institutional investors would also look for a stability of rates to determine their IRRs and ultimately whether or not to invest in a particular market or not. What's your view on this particular point?
No, I agree very clearly. See, any investor, I mean, if I'm not a speculator and if I'm a long term 20, 30 year genuine investor, right? Government need to do everything, whether domestically or from outside investor, to encourage people like, who are actually genuine long term investor. Now, for a long term investor, runs through a lot of uncertainty, right? Whether listed space, unlisted, we run through multiple uncertainty. What the
Correct.
interest rate will be, how the world will shape, what the extra delta of economic growth India will have. We are running through multiple kind of assumption for our long-term DCA for any investment, whether a
Correct.
domestic one or a one. Unlisted, another set of there are risks to be discounted. On top of that, if government policy adds on to any of the uncertainty, it's always not good, right? So what my concern is not the rates, the number is not important, right? It's basically people who are like investing into risk, which is equity is a risk, kind of a investment. Unlisted, even on top of that, for the risk, right? So basically, policymakers, government, their job is to reduce uncertainty. They are not add on to our, calculation of what the ideal, fair value of a stock, unlisted or listed, would be.
Got it. Fair enough. Fair enough. Bhuvna, what about you? What are your concluding thoughts on the budget?
Sorry, I've been quite morose about it, but there are a few shining spots. I really liked what they did about the TCS offset against TDS.
Yes, absolutely.
So, yeah, because I'm traveling this year and I spent a big chunk of money buying tickets. I'm quite happy about that set off, and I think the angel tax going is also a big
It's
one
a
for,
welcome move.
for
Definitely.
investors who are looking at startup investing. So I do a little bit of it. So these are personally good things. So I mean, on the whole, not as bad as I try to make out to be. It's a progressive budget. Of course, the heavy weight has to be the heavy lifting has to be done by somebody, which will be the investors. So We will do it, and hopefully, it'll take us forward. The focus is on the right areas where the money is going to be spent. Shailendra was right in pointing out the last 5 6 years has been on manufacturing. I think we have achieved leadership position in manufacturing in many sectors. Now it's time to upskill, and we were talking about this. So people who were born in 2010 will come in for voting in the next election, right? So, and that that generation wouldn't have seen any other prime minister apart from Narendra
Mr.
Modi ji.
Bobby, yeah.
Yeah, so it's very important to nurture talent in the next 25 years, 30 years. If we are looking at Viksit Bharat, if this our demographic dividend has to pay off. So the focus being on that is very positive, and I think it is some bright spots in the budget. Viksit Bharat, Viksit Bihar doesn't matter. Will grow as a whole. So
That's a wonderful statement to conclude the budget. And just to touch base upon the TCS part that you highlighted, it's actually a very good welcome move. Whereas people used to pay up to 20% of their foreign expenses as TCS as an additional liquidity burden, I won't say additional tax burden, and ultimately claim refund at the time of ITR filing. But now they wouldn't have to necessarily have that burden during the year, as their employer can take that credit if they have traveled, and they'll face lesser tax deductions as a result from their salaries. So that's definitely there. And as far as angel tax is concerned, for the ones who do not know, if a particular startup or company receives any amount of investment above their fair value as determined as per the income tax law, they used to be taxed on that. So for startups where it was very tough for merchant bankers or investors to establish the tax fair value, now earlier they used to get taxed, and the startup community made a lot of representations to the government about it. So it's again a very good welcome move that the government is promoting uh, investments in the private sector as well. That's a good point. And after that, FDI norms are also being said to be liberalized by the government. So these all are definitely the key good points that we need to take away from the budget as well. So thank you so much for your time, Bhuvna. Thank you so much for your time, Mr. Shailendra Kumar. Thank you so much for joining us. Hope you all could gather something from the audience. Hope you all could gather something from this coverage of ours. See you next time. Until then, stay connected. Jai Hind.
Thank you.
thank you.
Bye bye.